Welcome to the Hesed Financial video blog. Today, I'm going to talk about mortgages because buying a house and choosing the right mortgage is one of the most important financial decisions you will make in your life. So just to keep it simple, I'm going to talk about the two most common mortgages, the 30-year fixed mortgage and the 15-year fixed mortgage. I think both have their own benefits, but today I'm going to discuss why I think a 30-year mortgage is almost always better than a 15-year mortgage. And I am very aware that a lot of people out there, including Dave Ramsey, said to always get a 15-year mortgage. But I agree more with Warren Buffett, who said that a 30-year mortgage is one of the best tools that the average person has in their arsenal. So today, I'm going to talk about the benefits of a 30-year mortgage over a 15-year mortgage, and I'm going to tell you the main three reasons why I think the 30-year mortgage is a better option. So reason number one, risk. A lot of people are not aware of this, but a 15-year mortgage has a higher risk than a 30-year mortgage. Let me explain this. Let's say that you're out shopping around trying to decide which mortgage should you get, and assuming all other aspects of the mortgage are similar, the 15-year mortgage will have a higher payment than a 30-year mortgage. For illustration purposes, let's say that the 15-year mortgage has a $3,000 monthly payment and the 30-year mortgage has a $2,000 monthly payment. Now the banker or the loan officer will tell you, go with a 15-year mortgage because look at how much interest you're going to be saving with a 15-year mortgage. And not just that, but you're going to be able to pay the mortgage in just 15 years. And all that sounds good and everything, but here's the thing. Once you sit down with that banker, that loan officer, once you sign all the papers, you are locked into paying that $3,000. You cannot have a down year in your business, lose your job, or have an emergency such as a costly trip to the ER or a medical bill. You cannot go back to the banker and say, hey, can we go back to the second option, the 30-year mortgage option? I'm having a rough time. You know what he's going to say to you? He's going to say no. You are locked into paying the $3,000 mortgage payment. And now, of course, they are going to tell you today before signing all the documents, if you ever have any problems in the future, you can always refinance or get a home equity line of credit. That's not a problem. But there is a problem. It is a problem when you are experiencing a financial hardship. Maybe you lost your job, you acquire more debt, or maybe your business is not doing well. Then, whenever you apply for a refinance or a HELOC, the banker or the bank will know why you are trying to refinance, and they will most likely reject the application. Remember this quote: the best time to borrow money is when you don't need it. The worst time to borrow money is when you actually need it. So if you would have chosen the 30-year mortgage, then it will be a lot easier to go through that financial hardship with a lower mortgage payment and with additional money in your pocket, but I will explain that in just a second. Why do you think normally a 15-year mortgage has a lower interest than a 30-year mortgage? Because the 15-year mortgage is less risky to the bank. And if it is less risky to the bank, it's more risky to you. A lot of people get caught up in the idea of putting more money in the equity of the house. But when a financial crisis comes, it doesn't matter how much money you pay towards the house. It doesn't matter how much equity you have in your house. If you don't have the money, the bank will foreclose it. So that's reason number one, risk. Reason number two is taxes. What people don't realize is that paying interest in a mortgage is not as bad. because you can actually deduct the interest that you are paying towards the mortgage. So with a 15-year mortgage, you have a smaller amount to deduct, and you only have 15 years that you can benefit from the tax deduction. But with a 30-year mortgage, you have more interest to deduct and also a larger time frame to take advantage of the deductions. So again, reason number one, risk. Reason number two, taxes. And last reason number three, profitability. And many people will say, well, Edgar, you just said that you are going to pay more interest with a 30-year mortgage than a 15-year mortgage. So how can this option will be more profitable? And that is a very good question. You know, I have a problem when I hear bankers and loan officers saying, hey, you will be paying more interest with a 30-year mortgage, so you are better off taking the 15-year mortgage. Trust me, I have done it for years. And that's a very shallow statement, because it is just taking into account a very small portion of the whole picture. If we go out and get a 30-year mortgage, and let's say that the interest rate is 4%, and if we are paying our shares of taxes, and let's say that we are in the 25% tax bracket, then the real cost of that mortgage may be closer to 3% instead of 4% because of that tax deduction. So the question is, can we find a place that can give us at least 3%? I think there are some instruments out there that can pay you that 3%. Because remember, going back to the first example, if you are paying $3,000 for a 15-year mortgage versus $2,000 for a 30-year mortgage, then you have $1,000 extra per month that you can choose what to do with. With a 15-year mortgage, you don't have any options. It automatically goes into the principal of the house. But with a 30-year mortgage, you're not sending so much to the principal, which means that you have complete control over your money. And actually, I have seen people taking that difference and opening a 770 account or a participant life policy, and 15 years down the road, guess what? They will have enough money not only to pay the mortgage, which will turn the 30-year mortgage into a 15-year mortgage, but they will also have additional money. And more importantly, you will have complete control over that money for the 15 years. So if there's a financial hardship, first of all, you're not going to be locked into paying a higher mortgage payment, but also you will have some money in your pocket to deal with it. So a 15-year mortgage could be a good option for you if discipline is not your forte. But for most of us, a 30-year mortgage makes more sense. Of course, if we have the discipline to save the difference. It will be less risky, you will save more in taxes, and it's going to be more profitable. If you have any questions, please send us an email or give us a call. Thank you for watching, and God bless you.